Hey everyone, stop right there before you rush out to buy silver. January 2026 just dropped some data that completely changes the game, and if you jump in now, you might be walking straight into a trap. The silver market is shifting beneath our feet, and what looked like a surefire opportunity just turned into a cautionary tale. It's January 2026, and while silver prices have been making headlines, the latest economic reports, inventory numbers, and demand signals are telling a different story. This isn't the time to dive in blindly. The data shows signs of potential price corrections, supply chain shifts, and market dynamics that could push silver prices lower before the next big move. In this video, we're going to break down exactly what the January data reveals, why it matters, and why patience could be your best strategy right now. If you're serious about protecting your investment and maximizing returns, you need to hear this. Before we get started, make sure to hit that subscribe button like this video and share it with your friends who are watching the silver market closely. And don't forget to drop your thoughts and questions in the comments below. I want to hear what you think about this new twist in the silver story. January 2026 brought a flood of economic and market data that shaking up the silver market and changing the outlook for investors. To understand why now might not be the best time to buy silver, we need to look closely at the numbers behind inflation, industrial demand, and inventory levels. Inflation. Data. Inflation remains one of the biggest drivers of silver prices, as precious metals are traditionally seen as a hedge against rising prices. In January, the latest Consumer Price Index, CPI data, showed inflation cooling slightly but still running above the Federal Reserve's target. The annual inflation rate came in at around 5.8%, down from previous months, but still high enough to keep markets on edge. This cooling inflation suggests that while price pressures remain, the worst of the inflation surge might be behind us. For silver investors, this means the urgency to buy as an inflation hedge could be less immediate than before. If inflation continues to moderate, the strong upward pressure on silver prices could ease, leading to potential price corrections. Industrial demand. Silver's unique position as both a precious metal and an industrial commodity means that industrial demand plays a crucial role in its price dynamics. January data from major industrial sectors showed mixed signals. On the positive side, demand from the solar energy sector remains robust. China and other countries continue to ramp up solar panel production, which uses significant amounts of silver. However, supply chain disruptions and rising costs have slowed growth in some manufacturing areas, leading to a slight dip in overall industrial silver consumption. Additionally, the electronics and automotive sectors, which also consume silver for components and electric vehicles, showed signs of slowing demand due to global economic uncertainties and supply bottlenecks. This slowdown could reduce silver's industrial demand in the near term, putting downward pressure on prices. Inventory reports. Perhaps the most critical data point for silver investors is the status of physical silver inventories, especially those held in major vaults like COMEX and the London Bullion Market Association, LBMA. January reports revealed that registered silver inventories, the physical silver available for delivery against futures contracts, have stabilized after months of sharp declines. While inventories remain low compared to historical averages, the recent stabilization suggests that the frantic drawdown of physical silver might be pausing. This pause could indicate that the market is temporarily balancing supply and demand, reducing the immediate risk of a supply crunch. For investors, this means the extreme scarcity that drove prices higher may ease, at least for now. Putting it all together, the January data paints a nuanced picture. Inflation is cooling but still elevated, industrial demand is mixed with some sectors slowing, and inventories are stabilizing after a period of depletion. These factors combined suggest that silver prices could face a period of consolidation or even correction before the next major move. For investors, this means caution is warranted. Jumping into silver right now without considering these data points could lead to buying at a short-term peak. Instead, understanding these economic signals can help you time your entry better and avoid costly mistakes. To truly understand why the silver market is at a crossroads, we need to take a closer look at the fundamental forces of supply and demand. January 2026 data reveals some important shifts that could reshape the silver landscape in the coming months. Supply constraints. Silver supply has been under pressure for several years, and the latest data confirms that these constraints are continuing. Global silver production is largely tied to mining operations in countries like Mexico, Peru, and China. However, mining output has been facing headwinds. Declining ore grades. Mines are extracting silver from lower-grade ore, which means more effort and cost to produce the same amount of metal. This naturally limits how much silver can be mined efficiently. Labor and operational challenges, strikes, regulatory hurdles, and environmental restrictions have slowed production in key mining regions. For example, recent labor disputes in Mexico have temporarily halted some silver mines, reducing output. Geopolitical risks. Political instability and trade tensions can disrupt mining operations and supply chains, adding uncertainty to silver availability. These factors mean that new silver supply is not growing fast enough to meet rising demand, creating a structural supply deficit. Demand trends. On the demand side, silver's unique dual role as both a precious metal and an industrial commodity makes its consumption patterns complex. Industrial demand. January data shows that industrial demand remains strong, but with some signs of moderation. The solar energy sector continues to be a major driver, as silver is a critical component in photovoltaic cells. China's aggressive push for renewable energy supports this demand, but supply chain issues and rising costs have slowed growth in some manufacturing sectors. Technology and electronics. Silver is essential in electronics, medical devices, and electric vehicles. While demand in these sectors remains robust, global economic uncertainties and supply bottlenecks have caused some slowdown, reflected in softer orders and production rates. Investment demand. Retail and institutional investors have been a significant source of silver demand, especially during times of economic uncertainty. However, January data suggests a slight pullback in investment demand, possibly due to recent price volatility and profit-taking after the sharp rally in silver prices. Shifts. Indicated by the data. The January reports highlight a few key shifts: supply stabilization, but limited growth. While mining output hasn't T-collapsed, it's clear that supply growth is limited and unlikely to catch up with demand anytime soon. This keeps the market tight. Demand moderation. Industrial demand is still strong, but showing signs of plateauing or slowing in some sectors. Investment demand is cooling off slightly, which could lead to short-term price pressure. Inventory. Stabilization. Physical silver inventories, which had been rapidly declining, appear to be stabilizing. This suggests a temporary easing of supply stress, but doesn't eliminate the underlying deficit. What this means, the silver market is balancing on a knife's edge. Supply constraints remain a long-term concern, while demand is showing mixed signals. The slight moderation in investment demand and industrial growth could lead to a pause or correction in prices, but the fundamental supply deficit means that any price dip may be short-lived. For investors, this means the market is entering a phase of consolidation and uncertainty. Understanding these supply and demand dynamics is crucial to making informed decisions and avoiding premature moves. Recent price movements. Silver prices surged dramatically in late 2025, fueled by inflation fears, supply shortages, and strong industrial demand. Prices climbed from the mid-70s to nearly $100 per ounce, sparking excitement among investors who saw silver as a hedge against inflation and economic uncertainty. However, January data introduced a note of caution. Inflation showed signs of cooling, industrial demand growth moderated, and inventories stabilized. In response, silver prices pulled back from their highs, retreating to around $90 per ounce. This correction was not unexpected, but highlighted the market's sensitivity to economic signals. The price action since then has been choppy, with sharp intraday swings and periods of consolidation. This volatility reflects uncertainty among market participants about whether silver AS rally has more room to run or if a deeper correction is underway. Volatility and its drivers. Volatility in silver prices has increased significantly, driven by several factors. Economic data releases, inflation reports, manufacturing indices, and inventory updates have caused rapid price adjustments as traders react to new information. Geopolitical tensions, ongoing trade disputes, and global uncertainties add to market nervousness, prompting quick shifts in risk appetite. Market structure. The silver market. S mix of physical demand and paper trading creates sharp price moves when supply-demand imbalances become apparent. This heightened volatility can be both a risk and an opportunity. For short-term traders, it offers chances to profit from price swings. For long-term investors, it underscores the importance of patience and a clear strategy. Investor sentiment changes. Investor sentiment has shifted noticeably in response to the January data. After months of bullish enthusiasm, some investors are now more cautious. Profit-taking has increased, and some retail investors are stepping back, waiting for clearer signals before committing more capital. Institutional investors, meanwhile, are closely watching supply indicators and geopolitical developments. Many are maintaining positions, but are hedging risks through diversified portfolios and option strategies. Despite the pullback, the overall sentiment remains cautiously optimistic. The fundamental supply constraints and long-term inflation concerns keep silver attractive as a store of value. However, the market is clearly in a wait-and-see mode, balancing between the fear of missing out and the risk of a deeper correction. What this means for you. If you're watching silver, it is important to understand that volatility and sentiment swings are normal in a market undergoing structural changes. The recent price pullback doesn't mean the rally is over. It could be a healthy pause before the next leg up. Staying informed, managing risk, and focusing on long-term trends rather than short-term noise will help you navigate this choppy market. Remember, silver's unique role as both an industrial metal and a precious asset means it will continue to react to a wide range of factors. Silver's price and outlook just depend on supply and demand. Were also heavily influenced by broader geopolitical events, monetary policy decisions, and global economic conditions. Understanding these external factors is key to grasping where silver might be headed next. Geopolitical events. The world is currently navigating a tense geopolitical landscape, and silver is caught in the crossfire. Trade tensions between major economies, especially between the US and China, continue to create uncertainty. These disputes affect global supply chains, industrial production, and investor confidence, all of which impact silver demand and prices. Additionally, conflicts and political instability in resource-rich regions can disrupt mining operations and silver supply. For example, labor strikes, regulatory crackdowns, or sanctions in key silver-producing countries like Mexico and Peru can tighten supply unexpectedly, pushing prices higher. Geopolitical uncertainty also drives investors towards safe haven assets like silver and gold. When tensions rise, demand for these metals often spikes as a hedge against risk, adding upward pressure on prices. Monetary policy central banks around the world play a crucial role in shaping silver's outlook through their monetary policies. In recent years, aggressive stimulus measures, including low interest rates and quantitative easing, have increased money supply dramatically. This has stoked inflation fears, which traditionally boost demand for precious metals as inflation hedges. However, as inflation data fluctuates, central banks face tough choices. If they tighten monetary policy too quickly by raising interest rates, it could slow economic growth and reduce industrial demand for silver. Conversely, if they maintain loose policies, inflation may persist or worsen, supporting higher silver prices. The Federal Reserve's actions are particularly influential. Any signals of rate hikes or tapering asset purchases can cause silver prices to react sharply. Investors closely watch Fed meetings and statements for clues about future monetary policy direction. Global economic conditions. The broader global economy also impacts silver's supply and demand balance. Economic growth drives industrial demand for silver in sectors like electronics, solar energy, and electric vehicles. When economies slow or face recessions, industrial demand can weaken, putting downward pressure on prices. Conversely, strong economic growth, especially in emerging markets, supports higher silver consumption. China's continued push for renewable energy and technological advancement is a prime example of demand growth that can sustain silver prices. Supply chain disruptions, inflationary pressures, and currency fluctuations add layers of complexity. For instance, rising energy costs increase mining expenses, which can reduce supplies or raise prices. Currency volatility affects the cost of silver in different markets, influencing buying behavior. Putting it all together, geopolitical tensions, monetary policy shifts, and global economic trends create a dynamic backdrop for silver. These factors can amplify supply-demand imbalances, trigger volatility, and influence investor sentiment. For investors, staying informed about these external forces is essential. Silver's unique position as both an industrial metal and a precious asset means it will continue to respond to a wide range of global developments, making it a complex but potentially rewarding investment. Despite the recent excitement around silver's price surge, January 2026 data and market signals suggest that now might not be the best time to jump in. There are several reasons for caution that every investor should understand before making a move. Potential price corrections. Silver's recent rally has been impressive, but markets rarely move in a straight line. After a sharp rise, price corrections are common and sometimes severe. The January data shows signs that inflation pressures are easing slightly, industrial demand is moderating, and inventories are stabilizing. These factors could lead to a pullback or consolidation in silver prices. Price corrections aren't always necessarily bad. They can be healthy pauses that allow the market to reset before the next move. However, buying at the peak of a rally can expose investors to losses if prices drop. The current volatility and mixed signals suggest that silver could face a period of sideways or downward movement before resuming any upward trend. Market manipulation concerns. The silver market has a long history of price manipulation, often involving large financial institutions and complex trading strategies. These players can use tactics like naked short selling, algorithmic trading, and spoofing to suppress prices artificially and control market sentiment. The $90 silver price many see on their screens is largely influenced by the paper silver market, which can be disconnected from the physical supply-demand realities. This disconnect creates opportunities for manipulation, where prices are kept artificially low to benefit certain market participants. Recent events, such as the LBMA going offline and dealers freezing physical silver sales, highlight the fragility of the market infrastructure. These disruptions can be exploited by manipulators to create false signals, shake out weak hands, and set up for future price moves. Investors need to be aware that the current price environment may not fully reflect true market conditions, and sudden, unexpected moves can occur when the manipulation ends or falters. Upcoming risks. Economic slowdown. Global economic growth is showing signs of slowing, which could reduce industrial demand for silver, especially in sectors like electronics and solar energy. Monetary policy. Tightening. Central banks, particularly the Federal Reserve, may continue raising interest rates to combat inflation. Higher rates typically strengthen the dollar and can pressure precious metals prices. Geopolitical uncertainty. While geopolitical tensions can boost safe haven demand, escalating conflicts or trade disputes could disrupt markets and create volatility that's hard to predict. Supply chain improvements. If mining output increases or supply chain issues ease, the physical silver shortage could lessen, reducing upward price pressure. Why patience? Pays given these factors, jumping into silver right now could mean buying at a short-term peak or getting caught in a volatile correction. Instead, patience and careful analysis are key. Waiting for clearer signals such as sustained inflation, renewed supply shortages, or confirmed geopolitical risks can help investors enter at a better price and reduce risk. In the meantime, staying informed, diversifying investments, and considering alternative hedges can protect your portfolio while you wait for the right moment to buy silver. With the silver market showing signs of volatility and uncertainty, it's important to approach investing with caution and a clear plan. Here's some practical advice on how to prepare, when to consider buying silver, and alternative strategies to protect and grow your wealth. 1. Prepare by staying informed. The first step is to stay informed about market developments. Follow reliable financial news sources, watch for updates on inflation, industrial demand, and inventory levels, and pay attention to geopolitical events that could impact silver prices. Understanding the broader economic context will help you make smarter decisions and avoid panic buying or selling. 2. Wait for clearer signals. Given the current mixed data and potential for price corrections, it's wise to hold off on buying large amounts of silver right now. Instead, watch for signs that the market is stabilizing or entering a new upward trend. These signals might include sustained inflation above target levels, renewed supply shortages or declining inventories, increased physical demand from industrial users or governments, technical price breakouts with strong volume and momentum. Waiting for these confirmations can help you avoid buying at a peak and reduce the risk of short-term losses. 3. Consider dollar cost averaging. If you want to start building a silver position but are concerned about timing, consider dollar cost averaging. This strategy involves buying smaller amounts of silver regularly over time, regardless of price. It helps smooth out the impact of volatility and reduces the risk of investing a lump sum at an unfavorable price. 4. Diversify your portfolio. Don't put all your eggs in one basket. While silver is a valuable hedge, it's important to diversify across different asset classes. Consider including gold, other precious metals, inflation-protected securities like TIPS, real estate, and even certain stocks or commodities that perform well during inflationary periods. Diversification helps manage risk and improve long-term returns. 5. Focus on physical silver. If you decide to invest in silver, prioritize physical silver coins, bars, or rounds from reputable dealers. Physical silver provides tangible ownership and protection against counterparty risk, unlike paper silver products that may not always be backed by actual metal. 6. Secure your holdings. Once you acquire physical silver, ensure it's stored safely. Options include home safes, bank safety deposit boxes, or professional vault services. Security and insurance are critical to protect your investment. 7. Stay patient and flexible. Markets can be unpredictable. Be prepared to adjust your strategy as new information emerges. Patience and flexibility are key to navigating the silver market's ups and downs. By staying informed, waiting for the right signals, diversifying, and focusing on physical assets, you can position yourself to benefit from silver's long-term potential while minimizing risks. Remember, investing is a marathon, not a sprint. To wrap things up, the silver market is at a critical crossroads. January's data has shown us that while silver has had an impressive run, now is not the time to rush in blindly. Inflation is cooling, industrial demand is shifting, and inventories are stabilizing. These signals suggest a potential price correction or consolidation ahead. The $90 silver price you see doesn't tell the full story, especially with the disconnect between paper and physical silver markets. Patience is your best ally right now. Waiting for clearer signs of sustained inflation, renewed supply shortages, or strong physical demand will help you avoid buying at a peak and reduce your risk. Consider strategies like dollar cost averaging and diversifying your portfolio to protect your wealth during this uncertain period. If you're thinking about investing in silver, focus on physical silver from reputable dealers and ensure your holdings are securely stored. Stay informed, stay flexible, and be ready to act when the market shows its true direction. Now, I want to hear from you. How are you navigating this silver market? Are you holding back or already positioning yourself? Drop your thoughts and questions in the comments below. Let's get the conversation going. If you found this video helpful, please like it, share it with your friends, and don't forget to subscribe for more timely updates and insights. Your engagement helps us bring you the latest and most important financial news. Thanks for watching, and stay tuned for what's next.